Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is March 3rd, 2016. Market's in the final hour of trading here, and so far it's so good. I mean, the market's really trying to run here into the close. It was pretty much a drag early on in the day, and then here in the afternoon we're mounting a little bit of a rally. So it's trading in the green right now. We saw the same kind of behavior yesterday following the epic rally on Tuesday, where the S&P 500 pretty much just was chopping all around throughout the day, and then afternoon came and some buyers gained some interest. So we're seeing the same thing a little bit here today yet again. So it'll be interesting to see in the final 45 minutes that behavior holds up as well. So on the S&P 500 here on the daily chart, we have, it's an absolute full-fledged breakout. This was the area that it needed to get above. You had the pullback to the 10-day moving average on Monday, followed by the epic rally. Pretty much only by just a smidgen, it was the second biggest rally of the year so far. But probably the biggest thing is that we're not like what we saw here when we actually had the biggest rally of the day or of the year back in late January. You had some consolidation, which looked okay, but then a pretty heavy sell-off the following day thereafter. So, and that ultimately, created a new run to new lows on the year. So what you're wanting to see here is not that same kind of behavior, but follow through. And so the last 2 days we've gotten that follow through where sellers don't really seem to be interested in leaving their positions and booking profits. Instead, they're adding to their positions and they're building the market up and driving it higher. So we're at a critical point here, because when I take the daily chart and I pull it back some, you can see there's a lot of resistance here between this 1990 area. Let me pull it back a little bit more. Between this 1990 area there, going all the way up to about 2020 or so. If it gets through this 1990 area into the 2000s, I think it will find its way up to 2020. And if it doesn't sell off, then you have a legitimate case for some new all-time highs. So that's the S&P in a nutshell right now. Got all my nasty chart work there on this S&P. But anyways, you can see as well on February 11th, you have a pretty strong uptrend in place here, and really to invalidate the uptrend, it would have to close below 1951 today. Tomorrow, and this is a pretty steep uptrend, it would be like at 1961. So any kind of consolidation out of this market in the days ahead is going to quickly pull price closer to current price action. So if you have a 2 or 3 day sideways chop in the market, that upward trend line is, this trend line here from the February 11th lows, it's going to quickly catch up with price action and give the bears a possible play there. Now let's go ahead and look at some other charts. Let's just go ahead and go through a few of these indices here. NASDAQ looks really good. I mean, it's in the earlier stages of a breakout. It just it took a while for it to happen, but you can see here though, very healthy looking chart above the 50-day moving average. Not getting the follow through today that it saw yesterday. NASDAQ's lagging. If you look at the Russell, just a really strong uptrend in place, very similar to what we're seeing with the S&P 500, except even more steeper and even more further away from the trend line that's pushing it higher. So the small caps are actually in play. They're leading this market higher right now, which is something that we haven't seen play out in a while here. So that's definitely something to keep your eyes on the days ahead. For the Russell, I think there's really not much resistance. You could say that's a little bit of resistance there at 107 for IWM, and it's currently trading in the upper 106s. Or you could say that once it gets up to this area here, like the 112, 113 area, that some resistance will start kicking in. So I think that's probably more the plausible case there. Let's look at oil. And I did a post on this earlier today, but really, really fancy chart here. If you look at USO, you can see that it's clearly trying to break out. I mean, you broke the downward trend line, and for a long time, that was the the culprit for this commodity. I mean, breaking that downtrend, going back to the highs of November, that downtrend has just wreaked havoc for the commodity, and so far it's broken out, it's held up, but now it's struggling a little bit with this 50-day moving average. And I like oil a lot. I really have been tempted to buy this, and I did buy it, I think it was like 2 weeks ago at 851, and I didn't even hold it overnight. It was just a little too much, and I'm glad I didn't hold it overnight because it ended up taking a spill the next morning, no pun intended. But anyways, I got out at like 850. I only took like a penny loss per share on the trade. But USO though, I mean, it's a lot higher from there and everything, and it would probably have been better off if I would have held it. But there's a lot of volatility still with it, and wanting to hold it when it's really struggling with this 50-day moving average, wanting to hold it overnight, that's the problem. There's actually a good risk reward setup if you didn't have so much risk in holding the commodity overnight. Because let's face it, I don't really like to take more than a 3 or 4% loss on a trade. That's kind of on the high end for me. So when you have oil that's gapping down sometimes like 6-7%, you can't manage the risk in a very good way. I don't want to be up all night checking futures and thinking, oh my gosh, I hope the oil doesn't kill me the next morning by gapping down 10%. So that's really been the hang up for me. If I was going to trade oil, it would probably be a little bit more relaxing to trade something like Chevron or XOM. And XOM is probably the better of the two charts. On XOM, you have nice little consolidation there, but on CVX, you got this downward trend line off of those November highs there that's still plaguing the stock. So pardon all you can see I'm a trader though, because I had to put a lot of lines and markups on my charts. So CVX though, not bad. It's got a little bit of a base, but like I said, it's got this downward trend line still kind of plaguing that stock, and could end up facing some heavy resistance there in the days ahead when it tests it. Let's go ahead and look at some other trades here. ETSY, not a huge fan of stocks under $10. I know a lot of the people in the Twitter sphere are. I just really try to stay away from them. Nonetheless, though, you do have a little bit of a breakout there at the 850 range. It's pushing through it, but just tons and tons of roadblocks ahead. I mean, you got basically a huge resistance area from like 850 all the way up to 973. I mean, it could get bogged down anywhere in between. If you look at, let's look at the FANG stocks here. FB first of all. Facebook is actually not looking too bad, and it is trending higher. You got a 5-day moving average that's holding strong. You have multiple tests of that 5-day moving average, and each time it tests it holds on strong. So I like it. It's hard to get into it when you feel like that the ideal breakout price is probably closer to like the 105 area. You take Amazon. This is a little bit of a messier chart, and the case could be made that this thing is still in a legitimate downtrend. You take you take this here, and you have a slight break of this downward trend line. So whether that holds or not remains to be seen. 50-day moving average is going to be putting some pressure on this stock, as we're seeing yesterday and as we're seeing again today. So I would probably stay away from this stock right now as a long setup. It needs to put in basically a higher low, and then maybe consolidate some, and then give you the opportunity to get long on the stock. And then you got Netflix. I actually bought this one today, and it hasn't been really behaving for me early on. I got in around 96.80, I believe it was, and so far it's it went way below that, and now it's trading a bit higher. So it's break even on the day, which is kind of a rarity for Netflix. But two nice doji candle patterns there, and looking for it to make maybe a run up to the 105 to 110 area before it runs into any legitimate resistance. Let's see here. Yeah, I would say it could probably climb as high as 114 if you've traded Netflix for any time. It's a frustrating stock. It can really be difficult to manage the risk on. But at the same end, it can provide extraordinary profits too. So if you manage the risk right on it and let those stops ride up higher, sometimes you can pull off some really, really nice profits on it. So let's look at the last one, Google. I'm also in this one too. Got into it yesterday. Very tempted to sell out of this one early. I have a stop loss at 716.50, but this price action that we're seeing today, market's not doing bad, but this thing's just kind of puking on itself. It was breaking out above this consolidation pattern yesterday. I tried to get in on the pullback, but it's trying to pull back again today. You can make the case that it hasn't violated the trade premise, but a lot of it just has to do with, okay, we've rallied pretty significantly. I'd like to cut a little bit of risk out of my portfolio. This is the one stock that I have that's not really doing good at all. Another stock in my portfolio is GLD. I got into it today. I got in a lot earlier than this 120 range. I think I got in somewhere around like 119 in the 119s, and so far really good. It also provides a little bit of a hedge here. You can see from January and February when the markets were at their worst, this thing held up very well. So it's a little bit of a hedge too, not a pure hedge, but it is a nice hedge to the portfolio that can actually still rally like we're seeing today when the market's trying to rally as well. Now you got STT, not a bad stock, but you're seeing this with a lot of trades where they're going right up against the 50-day moving average and struggling a little bit with it. And so that's the case here, but it is actually a nice breakout. If you're looking for a financial play, this is probably one of the better ones out there right now, simply because it's just coming out of a base. Its risk reward is very definable. I may get into it tomorrow, but probably not today. Just the less stocks I have to hold overnight right now, the better, because we are very overextended. And so if we pull back, say 15 to 20 points, I'd like to have a little bit more ammunition to add some plays onto the dip. So that's going to do it for today. I hope you guys like the new format. Before I was just doing a Google Hangout. Now I got my own studio that I do all these things from, and that I actually can put some legitimate quality videos together and provide some timely market analysis. If you're interested in subscribing to the Splash Zone, I'd encourage you to go to shareplanner.com/Splash Zone. It's a quality service. I'm in there every day. I provide all of my trade setups, my watch lists, the market analysis as the market's unfolding, what I'm thinking, what I'm seeing, and I provide my trade setups in the chat room. I provide the stop losses, the target price, the rationale, the charts, and you'll get it via text, you'll get it via email, and that's even for internationals as well. So anybody overseas, you can get all those alerts as well, as long as you're able to trade U.S. stocks. If you have any questions, feel free to email me, ryan@shareplanner.com, and I'll be glad to answer any questions that you have. We're heading up on the weekend here, so I hope you guys all have a great evening and a weekend ahead. So thank you and God bless.